if we saw the previous decade, just 2011 to 2020, it was largely a consumer decade. B2B didn't do as well at all. There's a lot of talk about how whether now, because of the focus on manufacturing, infrastructure, capex, that this could be a B2B decade and not as much a B2C decade. Now, because you are a B2C fan, I'm tempted to ask you, how do you think about this argument?
Neeraj, I'm first a fan of buying stocks cheap.
Okay.
I don't really, the B2C were cheap, so we bought cheap. The PSUs were cheap, so we bought PSUs. I'm really a fan of buying stocks at a knockdown valuation, because that's almost a guaranteed way to make money in the stock market. So I think we have to go through, as you say, bottom-up stock picking, see which sectors look cheap to you. I mean, a lot of money has been made in the last year on PSU banks, which are the most hated stocks, because they'd gotten to a point that was, significantly cheap. Markets will tend to do these things in extreme. Will take, say, a Tesla or a Netflix at some point to some crazy valuation, and then bring them down to earth. And at one point, if you recall famously, that the S&P Energy was less than a couple of percentage points of the S&P 500. And today it's back to 10-20%, and the market cap of Berkshire and Exxon has overtaken a lot of other new tech companies. So, I mean, the first rule is not necessarily B2B or B2C. I mean, that may well be. But the first is to find stocks that are cheap. As my mother used to say, "Rupee ki cheez athandi mein chahiye." You want to buy things cheap. And I think that doesn't change. If that changes the stock market, the concept will be over.
Okay. So, do you reckon that as a basket, India is currently रुपए की चीज ₹1.25 में मिल रही है, or is it fairly valued? Also, in light of the fact that this whole trial balloon around peak rates and then a cut for now has been punctured, so that argument kind of hurts equity valuations per se.
Yeah, I mean, someone put in a headline very nicely here. He says that the unstoppable markets till last week had met the immovable Fed, and guess what? The Fed won because of the threat of a rate hike. The market is now taking that very seriously. But again, Neeraj, the risk of that is you're focusing on the next quarter and the next few months ahead. And yeah, that would make me nervous, clearly. But like I told you, for this time, I'm focusing on the bigger macro picture in India. And that picture tells me that we're going to have, 1.65 billion consumers in the next 20 years. We're already the most populous country in the world. It's a well-established fact that demographics is destiny in this country. Or in any country as an investment. A lot of countries are going through, hierarchy in terms of population. So I think the first point, and I'm repeating the point to you, is that I believe that this is a long-term structural bull market that's unfolding in India. And you'll obviously go through many ups and downs. But the key thing is to keep, as I told you, quote unquote, eyes on the prize. That is what India will look like in, say, 2047.